Hello again, welcome back to the Perpetual Pip. This is your host, Will Gomez, and it's time for another discussion here in our Forex tutorials. For our next tutorial, we're going to be talking about what is support and resistance. I'm going to go ahead and I'm going to tell you right now that this is probably going to be one of your key lessons. In addition to everything that you've learned so far, basic mnemonics as far as how the market works and the market dynamics. Support and resistance is going to come into your trading with everything that you do. When it comes to all of your trading decisions, they're going to be reflected here on everything that you do. When you're thinking about placing an entry, where you're thinking about placing an entry, where you're thinking about placing your exits, as far as where your stop loss for protection is going to be, and where your limit, your take profit is going to be. All of these are going to be revolving around the core concept of support and resistance. So what is it? Let's talk about it. We know the battle continues to go on, right? Between the bulls and the bears, we've got this financial struggle between these two contenders. So just like in any real match, you can't have any one team, if you will, winning indefinitely. So you're going to have a tug of war going on. And I've gone ahead and I've shown this here on an actual chart. Okay, this is an actual chart that I pull from the charting software that I like to use, TradingView. And so what we see here is this is a constant ebb and flow between the two contenders. You have overall progress, you can see the overall market direction, but you can see that the market doesn't just shoot there in a straight line. It flows and ebbs, pushes and pulls, scores a target and retraces. So understanding the dynamics of this and where it creates rest areas is going to help you to identify, to strike ideally. Okay? So let's develop that. First, the first thing that you need to understand is what a high and what a low is, or a fractal. The market term or the official term for it is a fractal. All right? Now, fractals are just peaks and valleys, right? A fractal high, very commonly you'll hear me refer to this during live broadcasts, or if you come across any other presenter or any other trader while they're actually discussing or looking for an opportunity, you will very, very often hear high. It's very typical for us as analysts and traders to refer specifically to a fractal high as just a high. Although we've discussed that every single candlestick formation has its own open, close, high, and low point, when we just use the word high, it's most common that we're talking about this, right? And a market high or a fractal is a candle high price that is higher than the two candles to the left of it and the two candles to the right of it. That's all it is, right? So out of a group of candles, you want to see one wick sticking out the most, and that is even if it's by a single pip. Okay, even if it's by a single pip, it still counts as being the high. So whenever you hear the word high, this is what we're talking about. Right? And the fractal low is just simply the opposite, right? The fractal low is a candle low price that's lower than the two candles to the left and the two candles to the right. Right? Now, quick side note, I don't want to spend too much time on it, but it is a possibility from time to time that you will come across multiple candles that have the exact same high or low price. Okay? The formula, if you will, to being able to determine what your high or what your low is going to be the exact same. It's still going to be this two to the left and two and right of the candle, right? So if I have multiple candles that share the exact same high, I'm still going to look for two to the left of those multiple candles and two to the right, because numerically they're going to be the exact same price point. So if I can get two to the left and two to the right of that exact same price point, then I'm still going to have a high or a low. All right, and later on when we talk about indicators, you'll find out there is an indicator called the fractals indicator that will actually identify these points for you. It makes it a lot easier, especially when you're first getting started, to see these things. But moving forward, just know that no indicator is made to replace your know-how as a trader, the skill set that you're learning right now. So as a important to know this because the indicator won't be able to handle a situation where it finds multiple candles that have the same high or the same low. It'll just skip over it, right? So know this moving forward. It's a little note that you may want to write down. Maybe write it down on your next viewing of this short video. Let's talk about the difference here between a low and a level of support. Now, as we discussed, a low is simply a point that has two to the left, two to the right that aren't as low as the center, right? So if that's the case, you're going to be able to find lows very commonly on any currency pair, on any time frame. When you're talking about support, though, support is a major stopping point, if you will. All right? Every single level of support has to be a low. That means that it has to have two to the left and two to the right. But not every low can be a level of support. The reason for that is because every single level of support must be a lower low. Right? The simplest way to explain this to you, when you think about support, think lower low. Support, lower low. Now, lower low from where? We start always, when you're trying to identify your level of resistance or your levels of resistance and support, you should start from the current candle, right? The current candle is your origin point, and you're actually going to be reading back in time. From the current candle, which I've highlighted here in this chart, from the current candle, you will go back in time, and you're going to look for a low with two to the left, two to the right, that is lower than the current candle. Right? Once you have found that, that's your first level of support. And you're going to continue to look for lower lows. Only lower lows can be considered levels of support. If it's a low with two to the left, two to the right, that is not lower than the last low, then you can't consider it to be a level of support. So it's got to be lower lows and lower lows. Right? Now, right here, I kind of stopped right here and highlighted this. This is kind of another rule of thumb, a tip of the trade, right? So to speak. Moving forward, when you go to identify your levels of resistance and support, if you find that you have two levels that are within 15 pips one of the other, it's okay to just go for the slightly lower one, right? The reason for that, we're going to talk about resistance as well, but effectively, these are going to be the points that the market is drawn to. It's hit it before. The market is traded by humans. Humans are creatures of habit, and we tend to conform to what we've done before. We like to do the same thing again and again and again. So these are points that the market has stopped at before, and as a result, they are noteworthy because most likely the market will come back to them. All right? Now, let's move on. Resistance is pretty much the opposite, right? When it comes to resistance, we start at the current candle, except this time we're moving upward. Right? And we're looking for higher highs. The simplest way to describe resistance is higher highs. So if you think about support, lower lows. If you think about resistance, higher highs. And it's always drawn from the current candle moving back in time. Remember, once again, if you find any level that is within 15 pips of the last level of resistance, then you can go for the slightly higher one, right? When it actually comes time to trading, and we'll talk about trading this later on. First, I want to make sure everyone is aware of the concepts. We'll talk about how to trade these different things in later videos. Here's an example of resistance. Again, starting from the current candle, you will move up to the first high with two to the left, two to the right. That's going to be your first height of resistance. Then the higher high, and a higher high, and a higher high. Anything that is not higher than the last level of resistance is still technically a high, but it is not considered to be a level of resistance. What you get when you take a look at these levels of support and these levels of resistance is you get kind of a staircase effect. When you're looking for support, you see a descending staircase. When you're looking for resistance, you see an ascending staircase, right? So this is not a difficult concept. I'll be more than happy to work with you on this live if you need a little bit of clarification. Definitely not a problem in the live sessions. So if you've enjoyed what you've learned, or if you have any questions, please don't hesitate to give us a like and a subscribe. Be sure to comment in the comment section. If you want to learn more, stay tuned for new content that's going to be coming your way continuously as I continue to add more and more videos. So far, I've been averaging about 2 to 3 a day, but that's going to slow down as I have to continue to create more content. Of course, these I've created ahead of time. In any case, feel free to give us a like and a subscribe, learn more, and if you decide that you want to trade alongside us, feel free to join us in the live trading room, perpetualpip.com. Coming up next, how do I identify trend direction? Let's find out in the next video.